The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 67, Nasdaq's down 9, S&P's up 5, gold contract up $1.90, 19.22. You get silver down 26 cents, $24.30 an ounce. Light sweet crude, big bid once again. Up $1.41, $40.63 a barrel. Notes and bonds. You get the 10-year down 2 ticks right now, 138.27. The 30-year off 11 at 173.28. And the 30-year, folks, broke its, I think it's the 28th of August. We had a spike low out there. Man, it broke it. They're selling that baby, so we'll see how this shakes out. We get Powell talking at 10:30. He's going to have to pump that 30 up. King dollar. King dollar down 53 ticks, trading 93.460. The euro is at 117. The yen is at 105.5, and the British pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
You know, fast markets all over the place, man. We got the Nasdaq. Don't count that Nasdaq out, man. Back in positive territory. Didn't take long.
Didn't take long. 40 points up, 40 points down, folks, in about 7 minutes. You know, what is intriguing out here, no doubt, though, is Apple can't hold price here. So it's going to be kind of interesting. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, if you want to understand the option market, option strategies, futures, outstanding program, Kevin has the experience. He'll walk you through all these different strategies. I don't care if you're a bull, you're a bear, what day it is, what time it is, okay? Bottom line is a strategy for that to bring up your probability that you're going to win. Defined risk, totally where it's at. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Happy Tuesday, guys.
Yes, happy Tuesday,
Happy Tuesday.
man.
You know, this market is expecting a stimulus package.
Yes.
And
it's just sitting there, isn't it?
It wants to go up
Yeah.
based on that, but it'll get frustrated the longer they make him wait for the stimulus package. And I think Jerome Powell speaking, Tommy, you said about 9:40 Chicago time, about 10:40 your time today. He's going to put more pressure on him.
Yeah.
That's his job right now, to put pressure on these legislators to get this done, because the market needs it. The market's asking for it. And, I'm not sure what else. He says he has more bullets, but Jerome Powell would much rather the legislator use their bullets.
No doubt.
Right now.
And you can see they're not that far apart right now, right? What are they?
No.
They're only like, $600 billion apart. That's not
Right.
that bad.
2.2 to 1.6, 1.7. So yeah, they're getting closer. That's for sure.
They're getting closer. Yeah, there's no doubt. And what you do have, just as you said, Kevin, there's no doubt the Fed can do so much, but there's got to be some cash sprinkled around for the amount of folks that basically out of business, don't have a job in general. Do you know what I mean? And you can't get off this type of stimulus like that either. That's the other side. That's what I think. We're looking at too in the future. Do you know what I'm saying? So
right. I mean, let's face it, guys. The problem with the coronavirus is we're not done.
Right.
And small businesses are still hurting.
Yes.
So what they need to do is target the really small businesses in retail and restaurants and travel and anything having to do with people going to a place seems to be the businesses that are struggling. And if we don't do that, you'll see unemployment start to plateau off here. And so you got to get us to the other end of this chasm that is this coronavirus. And we're close. It sounds like a vaccine is getting closer and closer. I have no news on that, but the news sounds pretty good.
No, that'll happen.
It's coming, right?
Yeah, there's no doubt. That's going to happen.
Yeah.
And that's going to be quite a relief.
And it's a pretty good timetable, I think.
Guys, on this economy. I mean, I'll bet right now, Tom and Tommy, you could both name a business, an iconic business in your area that is closed and may not return.
Oh,
I
yeah.
can.
Sure.
Around here.
Yeah.
Every town has them.
Right.
So
right.
These are the scars that are going to be left over. And will they eventually reopen, get more money reopened? Yeah, maybe. But there's still going to be scars left.
No, there's no doubt.
I have to say the bar that came to mind in Boston, Cheers in Boston, couldn't even find a home. So, yeah, it's everywhere for sure.
Yeah. And see, they depended, and Cheers, folks, is a very small bar. But they depended on the tourist traffic up at Beacon Hill.
Yeah,
and everyone
it's
wanted
almost
to see
an
Cheers.
anomaly.
Yeah.
But it's like, man, if they're shutting down, nobody's doing business at all, man, because
seriously.
they always had a crowd, yeah.
Yeah. You know, Kevin.
I mean, there's iconic places in Chicago. There was a place up where I used to live in downtown, Southport Lanes. It was like a bar, bowling alley kind of place. 100 years it was open, guys. Closed.
That's so sad, man.
That is.
And then, you know, of course, you get those great steakhouses in Chicago. Hopefully that, and those are iconic in a monster way. You know, Kevin, you know, we've been talking about that VIX, and we know that, you know, it was elevated and stays elevated, particularly through November because that election. But it is pretty intriguing, man, that this thing just won't budge off this 28, man. We get down to 27. You know, 0.96 for about a second. Well, it did 26.01 for about a second this morning, and then blasted up to 28.29.
Yeah, and really, guys, if you think about it, it doesn't matter if the market goes up. It doesn't matter if the market goes down. That VIX is trading at an elevated level. And I would expect that to stay there at least through, you know, the beginning of November, if not later, guys.
Sure.
I mean,
yes.
It looks like uncertainty is going to stay even after the election. So
right.
I would expect an elevated level of VIX for the time being. And guess what? In terms of trading, that's paradise.
Oh, for the option traders, there's no doubt. You know what I was thinking, Kevin? I'm wondering, you know, that there's so many more traders in the marketplace and participants in the marketplace. It's going to get intriguing to see that, you know, that the push and pull has been pretty cool. I mean, dramatically. So it's going to be interesting to see that, you know, when you have that many participants, okay, are there going to be that many people that continue to take insurance out? They've really done well. They're saying, okay, let me go delta neutral for a week, 2 weeks, whatever that is. Because it's hard to comprehend people just playing the VIX or hedging it, using it. You know what I'm saying? On both sides. So
sure.
Yeah, it's interesting, man.
Sure, and think about it. There's several different ways to hedge accounts.
Yes.
Right? And we teach people how to beta weight their account and take risk off. You could trade the SPX, you could trade the SPY, you could trade the VIX, you could trade any of the indices against your portfolio and take risk off the table there, depending on where your portfolio is concentrated. There's an indice or an ETF that you can trade against it and take some of the risk off.
Yeah, it's a big deal. There's no doubt. Because, you know, some market participants might just say, hey, listen, man, I want to be out of the market for a couple of weeks. Big deal. You know, There's always another trade, man.
But, Tom, you want to be out of the market without selling stock.
Exactly.
Right?
That's
tax events of selling stock.
Yes,
you want to just take the other side with a new trade.
That's right. Folks, right here, 45 minutes from now, you want to understand that option market, option strategies, futures, outstanding program. Kevin, you have a great one, safe one. We look forward to the program in 45 minutes.
Thanks for having me on, guys.
Thank you. Stay right there,
Kevin.
folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 135. We get the Nasdaq up 14. S&Ps are up 12. And Tom, we get so Powell's speaking at let's see, at
10:40. I think it is.
Okay, and I suspect we'll see if it's a speech. Maybe the speech got released. I couldn't find it yet, but because the market definitely got a little pop here. But as we were just talking with Kevin, it seems to me that this is all about stimulus. Do we get stimulus? When do we get it? All of the above. And, in your program, you're explaining the difference. They're not that far apart. I mean, it's pretty bizarre. No. I'm saying $600 billion is not that far apart, but really, in the context of things, it's really not.
No, and not, that's where the opinions come into things, though, right? Because
right.
Republicans are budging, so they say that it is material. And we'll see, man. There's so many moving parts like we talk about, right? You have the president getting out of the hospital last night. Literally 4 weeks from today, folks, Election Day. Get out there and vote.
November 3rd.
It's crazy that we're at 4 weeks exactly from Super Tuesday. Not Super Tuesday, from Election Day Tuesday. And how that plays into, the conversation right now is about stimulus, and it's about President Trump getting out of the hospital and having COVID and taking his mask off last night and all the other things that come with his performance. But so when I look at it and I say, if nothing happens with the stimulus, the whole conversation goes back to President Trump having COVID. So something's probably going to get done on the stimulus. But then you had the president tweeting out today, digging in pretty hard to his base when, if you're playing to win the election, you might need to court some, if there are undecided voters out there. And so part of me actually says, you know what? Maybe things are so dire that he digs in on the base and just stays there. And if that happens, spending tons of money is not what might get him there. So I don't know. Those are the calisthenics I'm doing around in my head right now.
Right. So, when we talk about the aspect of space, office space, right? Let's talk about that.
Pretty cool, this article, man, talking into numbers, statistics, So a survey by Cisco, all right, and big numbers here to get into exactly what we're talking about. 1,569 executives, knowledge workers, and others who are responsible for employee environments in a post-COVID era. It's talking about 1,500 plus people. Some 53% of larger organizations plan to reduce the size of their office space, and more than 3/4 will increase work flexibility. That's big numbers, man. Talking about the larger organizations. And then they get in more. So more than 90% of respondents said they won't return to the office full time. 12% plan to work from home all the time. 24% more than 15 days of each month. And 22% will do that 8 to 15. I mean, just huge numbers, man. It's to be expected, but that's one of the first surveys I've seen of, like, you know, a big survey talking about decision makers, large companies, and really breaking it down to in terms of 12% all at home. 24% looks like 50-50 or so. 22%, somewhere in the neighborhood of 1/4%, maybe 8 to 15 days every month that they're going to work from home. And it makes sense, man. That's why Zoom is through the roof, right? That's why the technology stocks are through the roof. And I was talking to a friend last night, and I was saying it's interesting. You see a lot of companies coming out, and that's where management roles differ. In some companies, you have executives like Reed Hastings comes to mind, who specifically said there's nothing like a work environment. We need people back. We need the creativity. We need meetings. Kudos to him. Maybe he's right. Maybe he's right for what they're doing in particular, right? But I was talking about on my program today, management is going to change because good management is now going to be about managing a remote workforce. And it's a different skill set than a manager who's first in the office, right? Last one to leave. Maybe you give your employees a little bit more freedom when you know that they're sitting at their desk down the hall from you, as opposed to when you have everybody sitting at home. And it's just me thinking about it, but you just need a little bit more focus in terms of keeping everybody on the same page. You have a lot of freedom at home. Maybe there's a couple more meetings. Maybe there's whatever it is, right? Checklists, checking in online, how you get that done.
I would say that that's right. The organizational skills have to be better. And I think most executives have them, but that now they got to tune them in. You need those lists. You need to say, okay, where are we going? Who we're going to delegate it to, and hey, listen, man, I think it's awesome. That's the real bottom line, because, if you can trust your employees and you get the list and you give them expectations, well, then, it should be cool, man, And
you should be doing that in a powerful, growing, solid company anyway, man. If you're needing to micromanage every single detail, now there are companies that have to do that in certain roles for companies, right? But in general, that's not a recipe for success, man. You give people goals, you give them targets, you give them responsibilities, right?
Right.
And in a good workforce, they're able to manage those responsibilities. So it's a little bit more difficult when you have absolute freedom, but as long as there's expectations there and they're very clear, and so it's interesting anyway, the survey, and big numbers. And you see it with the corporate workspaces, of course. You see it with people exiting. I mean, love Boston, love Chicago, but Kevin Hinks is talking about, man, it's like you're in the big city, big cost of living, you're downtown.
And it's much harder, in the aspect of, let's say just even going through this winter, man. I mean, in those large cities, it's very hard to basically stay safe. I mean, that's the bottom line. Whether it's going.
Say that again. Sorry.
In those large cities, it's very hard to stay safe. There's just so many hundreds of thousands of people also. So, going to work, the subways,
for COVID, you're talking about? Yes.
Yeah.
I didn't know you were just talking about safe, man. We got the president calling them anarchist cities. That's for the time serious. Wow. But yes, no. I mean, listen, that's why those second home markets, right? Until this is over, taking public transit's a tough deal. People got to do it, man. But yes, it's.
When I think of. I went in Boston, folks. I went to Boston Tech, so I lived in South Boston. Went to school in Roxbury. Those buses, I mean, you didn't have an inch standing up beside each other, man.
Sure.
I mean, you knew what people had for breakfast, man. Forget it.
I imagine in some trains in Boston, man, especially in New York City, right? That was par for the course before COVID, man.
It certainly is, and was. There's no doubt about that. Yeah. So the market out here, man. It's just kind of sitting there waiting, because you're sitting right at. I think it actually took out the highs of yesterday. But it's having a hard time getting up till, let me pull this up, ESZ. Maybe it spiked that high of yesterday. Let's see this thing. Okay, so, yeah, interesting. It spiked it. So what a spike is, folks, this is always intriguing when this happens. So the high of yesterday, 3399 inside the S&P futures. And when you see spikes, most times what happens with spikes, yeah, the spike didn't have, it had volume, but not a huge amount. Most times what happens with spikes, that big operator is actually looking to see are there any more buys up here. Because, see, this would be a natural place that people like buying breakouts, to basically be buying at this point. Because we're laying, right we're at the top of this consolidation. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 132. You get the Nasdaq up 7. S&Ps are up 10. Let's go inside the Dow for a second, Tom, and see what is moving the Dow Industrials out here this morning. You have the top dog out here. Looks like it's going to be Boeing, probably, right? No, it's Salesforce. Salesforce putting 30 positive points. Boeing 21, Goldman 20. Taken away from it. Apple 7 minus. Merck 6 minus, Johnson & Johnson 5, and Home Depot 4. And if we go over to Apple, if you were, was it Logitech and Sonos, right? Waking up this morning, they didn't dig that, man, right?
There's nothing to dig about that if you're a Logitech or Sonos shareholder. So they're not going to be available in the Apple Store anymore, and it's just going to be Apple's own products for at least for earphones, headphones, etc. in there.
Right, and so if we take a look at Logitech, folks, you'll see, it's been on a run. Bottom line is down, $4, which is not bad in the context of where it is. You can see that these large, any distribution center that can basically, bring you in and get you out is a big number. You know what I mean? It's like around here, if you have a good idea, folks, in the food business, meaning in Florida, you want to be able to get into Publix. Publix rules every grocery store, I think, in the Southeast. And if you get in there, bottom line is that you're going to do very well. You get out of there, all of a sudden your distribution goes south.
And you better offer some good BOGOs, man, because that's all I'm about. No.
Totally. Well, you know what's great about BOGOs, man? All the stuff that they really like, even if you don't need it at that point, just throw them in, like the sauces and stuff, right?
And for those not following, if you don't go to a Publix, their thing is they have buy one, get one. They're just constantly rotating the list of products that are buy one, get one. And I completely agree, man. If you're talking about non-perishables in any capacity, right? Some of my favorites out there for people, coffee.
Yeah.
Best buy one, get one out there because you're saving $8 a bag, maybe.
Yep.
Olive oil, also a great BOGO. You're saving $11 a pop. There we go.
No, totally. And sauces.
Yeah. Sauces, it's just the expensive ones. And those don't go bad. The coffee, olive oil, and capacity. It's so.
I know.
They got a great thing going, man. They do. I love looking at that savings, but man, it's amazing how the mind works, right? Because over the long haul, those companies might be getting a similar price point when you're talking about increased business. They must be given a BOGO just to be in Publix, right?
Right.
It's just,
what cracks me up? That I can go in there, right? And I get so excited. Like they had Ken's Thousand Island dressing on BOGO, right? I get so excited, folks, because I just saved $5, and yet I'll go spend $10 on a cup of coffee or something. It's so weird. But
but it saved money on things you were going to spend. So
right.
It is.
I know.
I know it's $5, but that's why the coffee and the olive oil, man. It's $8 a pop, $11 a pop, and I'm going to use it. It's period. And
there's no doubt.
When you get used to it, right? We're really deviating, but then when you get used to it, you feel like a sucker, man. When you have to go in there and pay full price, you say, "Why didn't I stock up on my BOGO?" And then next time you stock up on your BOGO, you lesson learned.
The lesson here, folks, goes like this. The lesson goes right back to we're all in the investment business. It goes back to compounding $1 or a penny. And if you do that, in the third grade, I think we were taught that, and you get it sometimes, but you don't get the ramifications dramatically. But if you have young children, anyone, you teach them that compounding. That is about as dramatic as you can get in the context of life. And if you're saving that, whether it's 20%, 30%, 50% on a continual basis, if you live like that, man, you can have a job that is, let's say, it'd be over, it's over minimum wage, but you wouldn't have to go over that minimum wage much. And that would add up dramatically over the course of years,
Sure.
So pretty wild.
Yeah.
Yeah, the market's waiting for Powell. So Powell's going to be up there in 5 minutes right now. And we'll see what he has to say. We'll see where that jams the dollar. The dollar's been... here, we got to go to oil, Tommy. That's.
I know, right?
Look at this, man. It rejected the lower end Friday and then just blasted topside. You get two big bars out here. So when we take a look at this, what you're going to see is that Friday we get down to 36.63. The swing low out here was 36.58. Just missed it and then just blasted topside. So, this thing's going to go after this, 41.72. And we'll see what happens at that particular point. Quite a number. And then...
It sure is.
Yeah.
What are you going to jump to? Go for it.
I'm going to jump to rig because,
okay.
when I looked at this morning, I just haven't looked at this for a while. And, I had been talking about this company going bankrupt for quite some time. It's sad. I mean, it traded down to 73 cents last week. It's at 83 cents right now. This is toast, man. This is at one point, folks. Okay, look at this. The stock was trading at $163 in 08.
Yeah.
And in 11, $85. Going back to even 2018, is that, what is it? That's,
yeah, October of 18, you were at
$12, $11.80.
14, yeah.
Yeah. And guess what? That says it all about the oil patch, because their specialty is deep water rigs.
Yeah.
And on those deep water rigs, folks, which is amazing, is that they would basically be getting like $150,000 to $180,000 per day as rentals. Imagine that, per day. Yeah, exactly. Now they don't even need them.
No.
Now what's going to happen? The next story you're going to end up reading about, and depending on how long you've been around the markets, I've seen this. This would be the third time that rigs are totally expensive, and then what they end up doing is that they send all the rigs over to India or Indonesia, and they cut them up for scrap. Think about that for a second. Oh.
Yeah, I mean, they're basically a piece of technology that's useless right now when you have oil trading so low. I mean, you go back to where we were at that time. I mean, that's when you had oil running from 2006 at $60 up to $150 almost, 147.27 I have my chart. And then, boom, it collapses to basically like right back to where we are right now, which is the real interesting part. I mean, that collapse in 2008 was only to $40. $40 is now like our reprieve zone where you say, man, you put oil on a daily. I always have it marked on my chart. This fall off that we had when the Saudis repriced everything over the weekend and the market really fell apart, 41.05. We're within about a quarter of that price level, which is very good if you're an oil investor. They're not pumping a lot of oil right now, which is why the price is okay. But that is the same price that we collapsed to in 2008 that caused rig to begin its demise. Now that's the price that everybody's happy oil has reached.
Right. Yeah. Amazing. And as one of the Tigers is saying here, that's the same thing. Cruise ship demolition business is booming also in India. And if you've seen these stories, folks, okay, you should Google it, because it's pretty wild how they do the demolition business. What they do is that the big cruise ships, right, that they're going to demo, they bring it right up on the beach, right? And then just thousands of people get on it and start.
I was waiting for it. Manual labor, right?
Yeah, I know, totally. You should see the pictures, man. The pictures are something else.
And it's worth it. For their wages over there, they can do that in a heartbeat, I'm sure. Yep.
Stay right there, folks. Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 131, Nasdaq's up 17, S&P's up 11, and some of the Powell quotes are coming out right now. Okay. Let's see what he says here. Federal Reserve Powell warned that a weak U.S. recovery without sufficient government aid and said providing too much stimulus wouldn't be a problem. There you go. Powell's remarks Tuesday came about, we know that this is going to, okay, so too little support would lead to a weak recovery, creating unnecessary hardships for households and businesses, Powell said in a speech of a virtual conference. By contrast, the risk of overdoing it seem, for now, to be smaller. Even if the policy actions ultimately prove to be greater than needed, they will not go to waste. So that says quite a bit. There's no doubt, man. That's, the pump is on here.
I would agree. There's a lot of risk to, just like we were talking about to kick off the program with Kevin Hinks, of these businesses just going to the wayside, man. And it's, they're just not going to start back up if everybody gets laid off, leases get nixed, people moved out, people out of business. You don't turn that key back on, as opposed to if you're able to keep them in business or some capacity. We get a vaccine, hopefully sometime in the next 6 months. And literally then you can just turn the key back on in that capacity for at least some businesses that were able to hang on.
No doubt. Let's go take a look at the copper contract for one of our tigers out here. So we're going to look at the December copper contract, folks. And so the question is, are you going long or going short? And this is intriguing, Dan, because that's who's looking for it. Because when you brought that in the den this morning, I was looking at this myself. Well, I was looking at it after you suggested it. This is a tough one where it is right here. The reason being is this. I mean, it would look that when you first look at this, that, we got that low out there yesterday of, 293.20. And, I suspect it wants to test that first before it wants to go to higher price. That's the way I'm looking at this. What I did like is actually when you brought this out this morning, see that high volume low? It was at 950. That wants to get tested out here. So, and copper, folks. Okay, when the thing is moving, it's moving. You're putting up like $4,000, and each point is $250. So, you get a trend going in that, and you can get some pretty good action, man. There's no doubt whatever Powell's saying, he's got some action in here.
I was waiting for it. I just put my chart up on a 1 minute because I said, when did this just happen, man?
Yeah.
And talk about a quick sell-off. But it's popping a bit. You're going to see that volatility. And anytime you're the Fed chairman saying things are dire, the government needs to act, the worry is that they won't act with enough. That's what he's out there saying, man.
That's what he's saying. That's
it's become so normal that we dismiss it, right? Pretty strong statements from the Fed chairman saying that the risk is not to the upside in terms of stimulus. The risk is that you don't provide enough, and the hardships that ensue, harm the economy for longer than necessary.
And folks, if you equate it to a water pump, you get a water pump going, right? And what ends up happening, when the pump stops, period, it is much harder to get it going versus that, first you flush with huge amounts of water. You can get little, you get to the drips, but guess what? And that's what he's saying. You know what I mean? That it's much better if it stops totally, then guess what? It's a lot harder to basically get it going. And I think that's what we have happening, though, anyway, on Main Street. I can't picture every recession that I've actually seen. What happens is that you watch the stores close, then nothing happens for 2 or 3 years, then you eventually start seeing the stores open back up again. It's kind of just how the cycle goes, man, because it takes a lot of money and a lot of confidence to do that, because guess what? In between that, you just save money. The feelings of destitute on the way down go away because time helps that. Then you take the chance again, right?
Sure.
So,
yes. Yep.
Yeah. Let's go take a look at, let's see, we got a couple gold stocks they want to look at. Let me see what this is. Northern Star Resources and Northern Star. Let's see what we got here. Northern Star. Where are you? Here's Northern Star. So this is an Australian stock.
They're getting a little pop today.
Yeah. Okay. This is interesting. Manufactures precious metals. What is that? Manufactures. Company provides mining and production of gold. So I guess they do.
Yeah, so they mine.
Yeah.
Mine and produce.
Right. Okay, so they're taking a lot of money. Well, that's Australian, though, but even still a lot of money.
Yeah,
$2
11 billion market.
$2 billion Australian. Okay, so that's definitely got some juice. And then the second one, let me just see. They must be combining or something. Let's see. Okay, here it is. So there's a merger that's happening. So the second one is SAR Minerals. SARAU. So the first guy did, what did we say, $2 billion. Oh, this is pretty funny. They get the exact same chart. Wow. And this one here does 1.1. So they're going to be a $3 billion producer. Yeah, I'll put this back in a weekly. I mean, it looks like they're merging, and I can kind of see it. You can kind of see it in the charts, man. And in both cases, they both do look like they want to go to their highs. So, Australia, lots of minerals in Australia.
Hey, could we go to CRM Salesforce? So
yes.
What is going on their news? Anything? I'm just curious. I have some Salesforce. They're a strong company, man, putting the Dow from 252 almost 258 today, and then pairing a lot of that. They have a couple things going on, I think.
So Salesforce Venture launches second impact fund for $100 million.
Okay. Yeah, and maybe that's what shot it up in the beginning, maybe.
Social media volume quadruples.
Yeah.
Yeah. So
sentiment's positive. They're tracking. But it's a nice pop.
This is a nice setup, man. So
it is. It is.
Folks, when you have something like this, okay, so you gapped from 210 all the way to 277. You pulled back with tremendously lighter volume. You're going up again. Now, this can stay in a consolidation for a while, but every time that you're down the bottom of that consolidation, if you're ever looking to buy Salesforce, that's where you want to go, man.
That was one of the companies that I happened to listen to the earnings call that night when they came out with those numbers. And I don't listen to a lot of earnings calls even, right? Because you break down there a lot of time. But I did listen to it that night. And the number of analysts that came on and were just like amazed at their numbers to start off their questions. Right. It was just a constant barrage. They almost couldn't have done better. And that was right after they got added to the Dow. So you got a lot of strength in a company like that, man.
And Salesforce, folks, is a subscription-based business, which is phenomenal. Okay, it's you do it once, the service continue. Right, exactly.
It's just
Stay right there, folks. Tommy and I come right back. We have the Dow up 100, Nasdaq down 4, S&P's up 8. We'll come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 89, Nasdaq's down 9, S&Ps are up 7, and we have minus gold, which trades in Canada, folks. One of the targets want to look at that. So lows 23 cents, the highs 204. There's still a exploration company, and this has had quite a run. And you know, looking at it, you got to be really careful on these ones, man. I mean, the stock goes from 53 cents up to 204. You know, you pull back with some light volume. You know, yeah, can it get back up to 204? Yes, it can. I mean, I don't know enough about this equity, but I know when I just pulled it up, you know, it still doesn't make any money. So hopefully, where that acceleration went up, maybe they're coming into production. You know, so. Market-wise out here, just hold on for the ride today, folks. That's the real bottom line. I think Powell said it all in the first statement, meaning that too much is not bad.
Yeah. There's risks in everything, and the risk right now is that businesses continue to close. I mean, we're at 800,000 initial jobless claims almost on a schedule every week.
Right.
So,
and that's going to be harder to the first couple months was easier when people came back. Now you're talking about the grind. Now you're talking about the aspect of the businesses that have held on, they can't hold on anymore. People get off. The businesses that were in, they brought the people back. their workers' meeting, and then you and I didn't show up at their place to give them any business. You know? So, it's just like the airlines. You can bring as many airlines back as you want. The real question is how much we're going to run around on the airlines, right?
I agree, man.
Stay right there, folks. We got Think or Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.